Hi, welcome back to the channel. I wanted to come back to you with a little bit more information about the 2-1 buy down. So I did do a video with one of my lenders, Jeff Janash, and we talked a little bit about the buy down, but I realized it could be a little bit intimidating to understand all the ins and outs. So I wanted to break it down a little bit more. So if you're someone that's kind of on the fence and you're like, wow, I really would love to purchase a home right now, but the interest rates at 7.5 or low sevens is too high for me. That monthly payment is going to not fit within my budget. The 2-1 buy down could be a really great option for you to be able to take advantage of some of the softer sales or prices and values that we're seeing a little bit here in the North Dallas area and some of the builder incentives in case you're interested in buying a new build or building from ground up. So I wanted to just share a little bit more, kind of break down the 2-1 buy down for you a little bit more, especially at the end of the year here. There's a lot of, you're going to notice if you're following Dallas area builders, you're going to notice a lot more providing incentives. So for example, as of the recording of this video, Highland Homes is offering $15,000 in incentives and contributing to a loan buy down. So a product like this that I'm about to share. And so it's important that you know what that means and gives you a little bit more concrete examples of what that actually does to your payment. So if you do decide to take advantage of the end of the market where things are softer, less buyers in the market, and you can do a little bit more negotiating, you have a better sense of what it is 2-1 buy down is. So let's talk about that. What is a 2-1 buy down? So what is a 2-1 buy down? Well, a 2-1 buy down is a mortgage financing option that now allows you to come into your mortgage with an initial lower rate. And then as the loan progresses, it will tick up slightly. The goal with the buy down though, is that you would refinance out of that loan before it starts to tick up. It's not the same as an adjustable. It may sound similar, not quite the same. So with the 2-1 buy down, the goal is for the first year, that interest rate is actually 2 percentage points lower than whatever the normal market rate is. So in our case, if the interest rates are around, let's say 7.25, that means your first year, you'll actually be paying a mortgage based on a 5.25% mortgage. And then the next year, year 2 that you own the home, it would go up to 6.25. So no higher than that. Then the third year, then if you never refinance out of this loan, then it would go up to the max of being 7.25. But again, the goal is that this is a loan product that allows you to kind of baby step your way into the home such that you can lock in the specific purchase price of the home. So take advantage of this slower season and still get the advantage of having a lower mortgage interest rate for the first 2 years. So let me break that down a little bit more. So let me share an example. I'll share a 2-1 buy down calculator. I think this will be helpful because sometimes when you hear these numbers, but you don't actually see an example, sometimes it's difficult to really understand what that means. And so what I'm going to do now is I'm going to share my screen and we're going to just walk through an example. I'll also include the link to this particular website so you can kind of play with your own numbers to determine whether or not this scenario might work for you. So in this example, we have a 2-1 buy down. There's a couple other loan products that are available. You've got a 3-2-1, a 1-on-1, a 1-0. For the purpose of this particular video, let's focus just on the 2-1 buy down. My lenders are well versed in all 3 of these, and so if you're interested in learning a little bit more about the other options, they can share that information with you. But I want to keep it simple for this video. So for this example, your loan amount is $500,000. It's based on a 30-year term, and around today's interest rate, at least the recording of this video, it's 7.25. So if we were to look at the buy down example with this rate, we've got a 30-year loan. We've got an interest rate that normally would be 7.25, but with the 2-1 buy down, that's actually going to bump that interest rate down to 5.25 in year 1. And then the next year, if you remain in this loan product, in this particular mortgage, the most it would go up is 6.25. So what does that look like payment wise? So let's look here at the bottom, where at the 5.25 interest rate, your payment, it actually would be $2761.02. Now the normal payment, if it was at the 7.25%, it would be $34.10. So that's a savings of about $650 for the first year. And adding that up over 12 months, you're gonna save about $7,800 on the 2-1 buy down. In year 2, if you remain in this loan, that means the interest rate ticks up. So it ticks up to 6.25, still lower than what it is currently. So again, this doesn't change because this is based on the 7.25, but your new monthly payment would be $3,078.59. So that's a savings of about $332 for year 2. And for the year, that saves you roughly about $4,000. So as you can see, it's a significant savings. And so if you're one of those folks where you're thinking like, okay, I really want to buy, but I'm a little payment sensitive. So I want to make sure that my payment is such that I can get comfortable with the payment before it actually winds up ticking up. So you basically have 24 months of an interest rate that's going to be below that 7.25 that it is today. So this is a great product if you'd rather act sooner rather than later. Now, let's talk about the pros and the cons. So for this type of loan, there are definitely pros and cons. You want to educate yourself. You want to know exactly what you're signing up for so that you can feel comfortable with the decision that you might make. And you definitely don't want, anytime you're dealing with a mortgage, you don't want it to be an emotional decision. So don't fall in love with the house and then put yourself in a situation that's not going to be comfortable for you and your family. So let me talk a little bit now about the pros and the cons. Let's start with the cons first. So the cons are the future rate increases, right? So as you saw in that example, it started at 5.25, but in second year, it's going up to 6.25, still lower than a current rate, but it is going to go up. And so that's something to consider and make sure that if you are to get in this type of loan product, my suggestion would be that you would be comfortable at the maybe let me take that back. Not necessarily comfortable, but the 7.25 rate, the max rate for this type of loan that you would have is still doable for you. If you find that that is just completely out of the budget, I don't recommend this type of loan. So you would want to be comfortable at the higher rate, but take advantage of the lower rate for the first 2 years. So it is going to cause you to have rate increases. But again, it's not rate increases forever. Like I said, it's not an arm where it's based on whatever the market is. You exactly what the rate increases are going to be. And so therefore, exactly what the payment increases are going to be. So there's no surprise here. Like I said, in this particular loan, in the example that I shared, the max that you're going to see is 7.25. So you can prepare a little bit better for that, but still I would consider that a con. In addition to that, the overall interest cost for this type of loan could be a little bit higher. So although you save a little bit when it comes to the first 2 years, if you compare it to a 30-year fixed, the overall interest that you're paying is going to be higher for this loan. So something to consider as well. And then lastly, market conditions. So there are a number of lenders that can provide this type of loan. So you're going to want to still search around to see exactly what the rates and things like that are to make sure that you're comfortable with it. So it does still take a little bit of shopping. What I will say though, a number of builders are providing buy down options, and even a number of sellers right now, at least in the North Dallas area, I'm seeing where sellers like resale homes, these sellers are offering buy down options. So with the buy down, I didn't mention this in the video, but it is something that the seller pays. So if that's that $11,000, I think that you saw in the example, I'll put up another screenshot of that. But if that $11,000, you're not paying that. That's paid by the seller. So when we negotiate a contract, we are including that into the purchase agreement such that that money's not coming out of your pocket. So essentially, the seller is paying for you to have a lower mortgage rate for the first 2 years. So that's great. Maybe that goes into the pros, right? That's actually somewhat of a benefit. But again, something to consider. You just want to investigate what makes sense for you. But those are a couple of the cons. So I'm going to pivot now. Let's talk about the pros. So pros for a 2-1 buy down. So first, you have a lower initial payment, right? That's a big thing. And so if that's something where you're really looking at your budget and you're saying, you know what, I can swing the 7.25, but I really don't want to, especially because I do think that interest rates are going to come down. So I don't want to pay that higher route. I'm going to refinance out of this type of my first loan anyway. This gives you an opportunity to save a little bit on those first 2 years of the payment such that you can realize and have that lower interest rate when you initially purchase a home, which leads me into my second point. That's a pro. It's just easier budgeting. You can kind of baby step your way into that rate. Like ideal state, you would refinance out of it. But let's say you never do, and it winds up turning in this example into that 7.25. Well, you're able to slowly get used to that payment and know exactly what you're getting. And it helps you be more predictable. It helps the budget be more predictable. I'll say it that way, because you know exactly what the increases are as you're going. So it's a con that it goes up, but it's also a pro because you know exactly what it is. There's no surprises. It's not based on the market like an adjustable rate loan or anything like that. Exactly what the mortgage payment is going to be for every year that you have this loan. So I would still put that in the pro column. And then the other big thing about this is it does allow you to qualify for a larger loan. And so because you're entering into this particular mortgage with a lower monthly payment, you potentially will get opportunity to qualify at a higher amount. So depending on what you're looking for in your next home, this might give you some additional space and budget to be able to get into the home that you really want. So those would be the three pros for this loan. Again, you still want to do your research and just make sure that this is the right loan product for you. Again, I'm going to put the link to the calculator in the description for this video, but I highly recommend that you actually connect with a lender. I'm happy to connect you with my team so that they can go over your specific numbers. The calculator is good to give you kind of a ballpark, but your specific numbers may be different. And so as you're trying to make decisions, you want to make decisions based on what's specific to you and your specific situation. So be sure to do that. Again, happy to connect you with my team so that you can walk through your numbers to see if this might be an option for you. So is the 2-1 buy down for you? I don't know. It depends on what your goals are. How long do you plan to be in the home? What's your risk tolerance? Some folks this is absolutely not going to be an option. They only want a 30-year fix, and that's totally fine too. My goal here is just to educate you on this loan product such that if you do really want to make a move now and you're interested in purchasing a home now, you still have the ability to do that. And so just the goal is to provide you with the resources that you need to make an informed decision. Know that you do still have access if this is something that you're interested in. So I hope this has been helpful. Please reach out if there's any other information that I can provide. Other than that, thank you so much for watching this video, and I will see you in the next one.